Oh, hello everyone, and welcome to the webinar. And apologies for starting a little bit later than usual. We've been wrapped up in all sorts of things. Wrapped up here in the UK with the obviously with the elections, and literally as we were looking to start and setting up. News has broken about the trade tariffs. As you may know, there was this 15th of December a deadline, and it seems you know, and the markets kind of all took off, which is great. And the yen was selling off, and so as I said, and we didn't sort of look at the time. Anyway, good to have you with us wherever you are. I know some of you were with us this morning, so lovely to see you here again. And I know we've got some of our quantum users, both the education students and those of you who have just got some of our indicators. And I think some of you are a first-time attendee. So as I said, you're all very welcome. It's just been, it is really one of those days. But before we start, as usual, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, this business can be extremely risky. So please, please don't ever think of using money that you cannot afford to lose. Right. I was kind of, what I was going to say has I've been kind of preempted by the news that has come in with regard to the tariffs. But basically, on your screen, you will see my MT5 platform. It's a great platform. I just happen to have a pair up at the moment. It's a Euro Aussie, and it's a pair that I've been analysing, trading, writing about but most of this week, and picked up on it again this morning, and been waiting for it to go, you know, to go lower once it had broken through a very key significant level on the 4-hour chart, which it has done. But what we started with this morning is, obviously this time of the year, we're coming into Christmas, the end of the year. This is really the last big trading week before the holidays and you know, the start of the new trading year. And we've had the FOMC, we've had the ECB this morning, we've had Christine Lagarde's first outing as the new chair of that organisation. And I was also going to say in the background, we also have this ongoing situation with the issue with the tariffs and the US-Chinese negotiations and this deadline that was coming up on December the 15th. And the point I was going to make this morning is, as traders, whether you're, you know, just as a day trader, a fast action, you know, very fast trader on the tick charts, Renko charts, tick, and maybe second and, you know, 1 or 2 minutes charts, or you're, you know, on the slightly slower charts, you still have to be aware of the of the different markets. You know, you may just focus on an index, you may just focus on a currency pair, you may just focus on maybe some stocks. But what's going on in the markets generally, particularly with the central banks, what's going on with the politics, is going to have an impact of what happens on your charts, because you can see the perfect technical setup. You can see a setup. You can see a nice reversal with a hammer candle forming, maybe, you know, a lot of volume. It's great. But if that happens just before, you know, a major announcement or something unexpected happens and you don't know why, you know, so you've got to be aware of what is going on in the background. And the way we looked at the charts this morning was also with the both having volatility and a lack of volatility. When you look at a chart, what are you actually seeing? What are you seeing on, let me go back to, this is the 4-hour chart. This was the, and it's as good a chart as any, because our methodology of volume price analysis can be applied to any market. Somebody wrote to me the other day and said, you know, what should they do about cryptos? They want, you know, they not advice about whether to buy them or not, but just generally. And I said, well, you look at a crypto chart in exactly the same way as any other chart. You look at the price action, there will be volume as well, and you interpret it in that way. And you know, if you are fortunate enough to have our quantum indicators, they will help you even more. And this is the chart of the 4-hour chart for the Euro Aussie. Euro Aussie has had a big fall over the past few days. This was before today's ECB meeting. And the 4-hour chart shows this very, very graphically. We have a falling market, very widespread candles, and we've actually got some rising volume as well. Yesterday, I wrote about this and I said we had a nice fall. I said, but it looks like it's coming to a possible pause point and a reversal. Volatility came into it. The CSI that we use, the individual currencies looked as though they were going to at least reverse, and I said it will reverse certainly on the faster time frames, and this is exactly what happened on the faster charts. But I also said part of VPA and part of our chart analysis is the use of support and resistance, and I said if you look at the 4-hour chart, because you look at charts, you look at multiple time frames, and when a market is on the move and move quite fast, you need to know where do you think it's going to stop. Some people use moving averages, 100, 200 moving averages. Great, at least it gives you something, a potential target. We've got support and resistance on the M245 platform. We have two types of support resistance. One is purely price-based, which is this line here. It's a solid line which tells us that it's quite strong. We know it's strong because if we look to the left of the chart, we can see the number of times the Euro Aussie has actually approached this region. We have to talk about a region. This indicator is absolutely pinpoint accurate, but in general terms for support resistance, you have to look at regions, zones, and you can see the number of times where it's come down, actually touched it, or in this case almost touched it again and bounced off. And this is exactly what it did yesterday. We had a pullback, a correction, which is perfectly tradable on the faster charts, and then the issue was this going to break today, possibly prompted by what Lagarde was going to say? We didn't know, but what was certain is we would need lots of volume to break through. Now, the candle that was forming here, this is the 4-hour chart, you can see here, it bounced precisely off this level. There's a wick to the bottom of the candle, and there's actually a decent amount of volume. Now, if you didn't know the background to what was going on with this particular pair, you would say, well, actually, I've seen it bounce here, 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 and it's bounced here again. It's had a little, and it's come back to test it. From a technical perspective, you think, well, it's a wick to the bottom of that candle. You would not be incorrect in assuming that the likelihood that this price would reverse, and it did. As you can see here, it bounced off, it went up to the next this level here, but because of what's going on in the background, bang, it's gone exactly in the opposite direction. So it's price action, hopefully analysis, technical, based on our volume price analysis methodology, and then on top of that you build your tactics. If you've got quantum tools, you use the quantum tools, or maybe you use other other tactics. You maybe use Fibonacci, you use moving averages. It's very much up to you. Volume price analysis allows you to do that. This support and resistance indicator is dynamic in as much that when it's in this hatched form here, it's much weaker. But if that is constantly tested, that then becomes a more solid line and a greater resistance or support. Then we have support and resistance seen through the prism of volume and time, and this is the shaded background that you see to this chart. This is the volume point of control, a hugely significant area on this chart. It's the fulcrum of the market. It's around which particularly in a congestion phase, a market will stay sometimes range bound, sometimes narrow, very close to the VPOC. Other times, it'll travel, it'll attempt to break away and then come back, and then attempt to break away and then come back. Now, on this occasion, on this chart, it looks as though having, oscillated between 61.46 to the downside and here 63.07. We can see here the resistance, opposite of what we see here. It looks like this range now may be taken out, which is great for me because I've been short Euro Aussie, and I looked at the daily chart and I thought, you know what, I think I might stick some more positions on because it's been in consolidation for such a long time that I may add to the ones that I have, and I'm able to hold on to them as well because I get positive rollover. So even when that position was negative for a little while, I was still earning on the interest rate differential. Right, if I just move that down there. And finally, on, as I said, that's my medium to longer term positions. My shorter term positions, I would normally have on this workspace here, I would have a Renko chart, and the Renko chart picks up. This is the move lower that we see here. Your entry would be once the trend dots and certainly the trend monitor were very much in alignment. It picks up the little pullbacks and reversals. We can see here possibly there's a reversal setting up to the long side, but always used in conjunction with the time chart. This is the what am I doing? This is the 3-minute chart should be up here. Hold on, or even 4 minutes. There we are. Let's have a look. Yes, again, it's a break away from the volume point of control. Down it goes, bounced off this support here. Look at the 12, and I've got the 12-minute here. This is the move away. Lots of volatility. We know that's volatility because we've got the volatility indicator that is being triggered. I was asked the other day about one of our indicators, and it was a currency strength indicator, which we use in our forex trading. See here, this is the movement of the individual currencies, and the question was, well, you know, these types of indicators are not very good because they're lagged. Well, all indicators are lagged to some extent, and the way you use something like this and other indicators, you use them in multiple time frames. So you use one time frame to give you a view of what the individual currencies are doing. We can see the Aussie has been bought in quite heavily, but it's now reaching a position of possibly oversold, overbought. Is it going to reverse? Well, we're going to see that in the faster time frames. So you juggle time frames to give you a clue as to what is going on. We've also taken it one step further, where we've actually ranked the pairs, and David will explain in a little bit more detail on the NinjaTrader platform, but it works in exactly the same way. But we do have indicators that actually work in real time, and one of them is the volatility indicator. It's based on average true range. So when that triggers, when that back candle is being formed, in that formation and that price action moves out of the average true range, that will trigger, that will come up, and you will know that, first of all, you're in volatility, you've got momentum. There is momentum with volatility, and the chances are what will happen is it will revert straight back into the spread of that candle. So if you're short at that point, because you've taken the view that you want to sell the Euro Aussie, you will know you are going to suffer a pullback because the volatility indicator has been triggered. It may carry on in the original direction, or it may actually reverse. You never really know. You have to look at your charts. And this is where, if you have it with the Renko indicator, that was the correction and the pullback that you saw on the time chart. But because the trend dots don't change and the trend monitor doesn't change, you can, you feel comfortable in being able to stay in that trade. The support and resistance indicators as well, they build in real time. So every time price hits it, accumulation and distribution is over on NinjaTrader, works with the same principle. That is also works in real time. And the volume point of control works in real time. So at the moment, when you have another congestion phase building in a different part of the chart, if that builds and builds and takes over the point at which the VPOT was, as we see here, then it will move down. So as soon as, these indicators work, as I said, some obviously have an element of lag in them. That's just the way they've been, that's just the way they are. But we have tried to develop ones where we have tried to put them as close as possible to the market action to give us that extra, bit of an advantage, that we can take from our other traders, because that's event. I know we trade against the market, but we're actually trading other traders' opinions. Right, that's what I want to say about that. I know David's been looking at the indices. On the news side, as I said, we've got the election here in the UK, so obviously lots going on in the British pound, and I tried to find what the get what the implied volatility was for the cable today, and I couldn't actually read the number on investing.com because it is very, very high. So here it is. Make of that what you will of that number, but if you compare it, say, with the euro dollar, the overnight volatility that's also quite high. It's 11%. It means you're going to get some movement, which is actually what you want. And you compare it, well, what was it a month ago? Look at it, it was down at 5%. Very difficult trading, very tricky trading conditions when implied volatility is on the low side. Right, I think that's what I was going to say about that to bring it all together. David, can I pass back to you? Is that right? Right, brilliant. S&P is up 30, which is great. Looks like what with Jay Powell and you know, the trade talks, I think the powers that be are determined that these markets are not going to fall. And finally, the one thing I would like to say is, if you're new to VPA and you want to know, well, how can it be applied to the different markets and different instruments, my own site, annacooling.com, you will find analysis of things like oil, gold, stocks, indices, Forex as well. But the indices in particular, you only have to look at the posts that have been up there for the last 5 years, David? I don't know how far they go. I wouldn't suggest you go and read all the old ones, but you actually look at the dates of those posts and the number of times that David and I have called that this market is not ready. This is not the big short. I mean, I'm fed up with saying it, but you know, hey, who am I? Who's going to listen to me? But the reason it's up there, it's not because of me. It's not because of, you know, how clever I am at anticipating and predicting the market. No, it's the methodology. It's volume price analysis. I do it because I want to share that methodology, and I want to share the power that that methodology can give you as a trader and an investor to become successful in this market. And also, it will highlight things on the chart when all the noise that's around you is saying, oh, this is it, the sky's falling down, that's it. We used to have a comedy program in this country called Dad's Army. We're doomed, we're all doomed. You know, we're not doomed. VPA will tell you when the time has come for this market is really going to roll over. Enough. Anyway, enough of me banging on about the volume price analysis. Let me pass over to David.
Absolutely. Hi, everyone, and a very warm welcome. Good to have you with us this afternoon. Just going to show my screen. There we go. I hope the weather is a little bit better than it is here. It's like the final day of judgment, I think, outside. It's absolutely appalling. So I hope it's a bit better where you are, and a bit warmer than it is here as well. Right, let's just move that out of the way. I'm on NinjaTrader. Anna was on MT5. There's lots going on, so I'll skip around. This is on the currency strength indicator. This is on 15-minute time frame up here, as you can see. And what we're seeing right now is heavy yen selling. This is the yen, the magenta line. So we've got plenty of yen selling going on, and we've got plenty of Aussie buying going on at the same time. So the Aussie yen is certainly one that's been moving very nicely, certainly in the Forex market. But it's just an indication of the sentiment that's moving the markets right now. I'll come back to that in a minute. Let's just head over here. I've got the ES here. In fact, let's start with all three together. Where are we? There we go. There we are. That's what's been going on so far. This is the YM top left, which is the futures, the E-mini futures contract for the Dow Jones cash market. This is the NQ for NASDAQ 100, and this is the ES for S&P 500. So those are all the futures contracts. I've rolled them over into March because it's coming up for expiry today, so rolled them forward into the March contract for 0320. So they're on 5-minute up there, and here we are down on the daily time frames. And really just to pick up on what Anna was saying, when we had this big reaction last week over here, let's pull that over a little bit. We actually wrote about this on the night that the price action had closed, and we said this is heavy buying coming into the market. Look at the amount of volume that's come in, massive wick to the lower body. There's buying coming in. This is stopping volume. This market is not ready to reverse. This is going to reverse higher and pick up the bullish trend again. That was written the day before, and this is what's going on right now. So it just reinforces the power of volume price analysis, and it's underpinned by what it can do for you, basically. And if you've read any of the books, or if you've seen any comments on Amazon, then you'll know that a lot of traders have read the books and have benefited accordingly. In any market, can be cryptocurrencies to whatever, and any instrument, whether it's futures, whether it's ETFs, whether it's stocks, whether it's currencies, whatever it may be, currency futures, spot markets, whatever, it applies universally. So that's what we've seen so far. Big move up on at the open, and as you would expect, just pop that open full size. There we go. Ton of volume coming in. This is the obviously the Globe. This is Globex running into the cash market open. Ton of volume coming in. Volatility trigger. Bit of a reaction inside the candle, but no real wick to the top of the candle. So it's really just confirming the strength of buying, and really that's just been confirmed. And really what we're seeing now is a classic reaction. We've had a huge surge in the market. A lot of traders have made a ton of money following that higher. Now we're seeing profit taking coming back into the market, and also that is associated with the reaction that you get to these news items. It's what we call the souffle effect. In other words, it rises very rapidly, but it's also likely to fall just as fast. And this happens repeatedly. It's happened so many times in the UK market here, certainly in terms of cable and British pound, generally speaking, where the market reacts to an item of news or a poll or whatever it may be, or someone says something, a statement about Brexit, blah, blah, blah. Market jumps and then possibly almost straight away, almost immediately reverses back lower. That's certainly the souffle effect when a market's rising, but you also get the reverse when it's falling, falls very quickly and then rallies back up again. So that's what we're seeing right now. No great surprise. It's also really confirmed just with the volume. Look at the volume. As this market is rising, the volume is falling away. So it's just giving you a heads up that, yes, we've had a good strong move, but this is now running into weakness. We've got weakness signaled here. We've got a big wick to the upper body of the candle there. Good volume under that one. And then as we move up towards the volume point of control, that's also giving you a heads up that this market is perhaps not going to go very much further because the volume is building at that level. It's the fulcrum of the market. It's the point at which we've got price agreement. And now we're starting to see that come off. In terms of the actual selling that's accompanying this right now, interesting to see what this candle is. This is on 5 minute, but the actual volume that's associated with that reversal is pretty low for the time being. So unless that picks up, it's a question of how far that reversal is going to take effect. It may just be a simple pause point, not a dramatic reversal in the intraday trend at any rate, and certainly not enough to change the trend on the daily, which is very bullish at the moment. Let's just head back let's go over onto this workspace where I've got all the various time frames set up. There we go. So here we're seeing the reaction. This is on the ES, so we're staying with the same contract. Nice move if you're a scalping trader. That's from 174 down to 169. So there's 5 points there. That's a healthy return if you're an index trader on the ES. Pretty nice. And you can see that reflected in the trend monitor, bright red as you would expect. This is on 15 seconds, so this is pretty quick. It's a time frame I use a lot myself. It may not suit you. And as I mentioned in the webinar this morning, one of the most important modules that we focus students on in the Forex trading program is very much the psychology of trading, because it's pointless you're trying to trade in one particular way if it's not going to fit with your personality. If you find it uncomfortable or difficult to do something, and you don't enjoy doing it, then you're not going to make money because it doesn't fit your personality. Just while I'm talking there, we've got a big surge in volume. You saw it come in literally there, that big spike. We've got the volatility trigger. That's gone off in real time as well. So we know we've got volatility. The market makers are in here. Big spike in volume. I'll check with Anna in a moment to see what's coming on the news feed, whether it's going to be reflected over here as well. And it's one of the reasons that, one of the many reasons I like to use this time frame, because it gives me a heads up as to what's going on in these slightly slower time frames. This is a 3 minute, this is a 5 minute, down onto the 10-minute, down onto the 50-minute, and over here on the right-hand side we've got the daily. So just be interesting to see how that pans out. Volume point of control is building down here. Just pop open the 3-minute, just get a slightly different perspective on what's going on. Okay, we've got a rise in volume here, but it's not huge at the moment. But this is a classical shape for a price waterfall to develop. But ideally, what I'd be looking for is really this volume going up somewhere here, and it isn't. So it's not tremendously strong, the volume right now in terms of selling pressure. We've got a low volume node coming up here, so if the market does break further, this area the market should push through that region relatively quickly, relatively easily, because there's nothing in the way of volume at the moment to prevent that happening. And there's certainly nothing from a price-based perspective anyway. This is a very strong level on the accumulation distribution indicator. This is based on price. This volume histogram, as you would expect, is based on volume. But volume works exactly the same way when it's laid out on the chart in this histogram, and therefore you can interpret it as support and resistance. Because if you're coming into this region here where you've got high volume, you expect the market to pause. It's going to congest at that region purely because you've got a ton of volume here of old orders. Traders were stuck in weak positions, all sorts of stuff going on. And in addition to that, which is a slightly more nuanced aspect, I suppose, ton of volume coming under that one. Look at the amount of volume that's coming here. Slightly more nuanced in terms of if the market pauses at a region and there's a ton of volume building in that area historically, then clearly the market considers that an important level. And therefore, that's another reason it is likely to pause at that level once more. So it's just a different way of looking at volume. The volume point of control brings together the whole business of volume, price, and time. This linear relationship here is about volume and price. It's looking at the candles. It's looking at the relationship to volume. Is this buying? Is this selling? Is this heavy selling? Is it heavy buying? What is it, and what is likely to happen next? When you move up onto the y-axis here in terms of volume, price, and time, what you're doing is bringing time in, and that is what builds the volume histogram to give you a view on where these volume regions sit in terms of the price chart, and therefore what is likely to act as resistance or support, or is very light in terms of when price gets to a low volume node, and therefore is likely to move through pretty rapidly. It's all invaluable stuff to help you at the live edge of the market trading. The one question that you want to know, which is simply what is likely to happen next? Where is this market going next? And that's what volume price analysis does for you. End of. It's as simple as that. Just hop up to 5, just keeping an eye on that volume there. Okay, we've got decent volume coming in here. Volume point of control above, so that's pressing down. We've got a nice low volume node here, so if it's going to break to the downside, that should go through there pretty quickly. Just move the chat box out of the way. There we go. The reason that volume is building on some charts and not others is purely because I've got it switched off on some. You can have this coming in on the close of the candle, or you can have it coming in tick by tick. I just happen to have it on the, some of them I've got it on. This one, for example, I haven't got it on the tick. This one I haven't got it on the tick either, nor here. So it'll fill once the candle closes. Let's just see where we are. Okay, we're trading around the volume point of control on 15 seconds, so that's fine. Trend monitor here you can see is in transition. We've gone bullish, as you would expect, up into the rally. Then we're moving into these transitional colors. The trend line here is diving quite strongly. So we've come off this strong trend. We're moving away from the volume point of control. And the trend monitor is now signaling that in terms of the transitional colors. And ultimately, if this is a full-blown reversal from one trend higher to one trend lower, then we will see that rotate through into bright red in due course. And of course, that will ripple across through into the 5-minute. There's no flicker of a change on 5-minute yet. You wouldn't expect it to. But if it's of a strong change in the trend, then that is what you will see ultimately across the time horizons. Let's just go on to the charts here. These are the indices themselves on a 5-minute time frame. These are available on, this is NinjaTrader, but they're on MT4 and MT5 as well, and they will be on TradeStation too. Top left is the yen index. This is what we've seen so far. This is the open here, 14:30 our time, 2:30 for US cash market open, and we've seen that heavy selling of the yen, which is reflected on this 5-minute time frame. This is the dollar. We're seeing strong dollar buying at the moment on the 5-minute time frame. Euro at the moment is pretty flat. And over here, this is the British pound. This is the one we'll be watching like a hawk in the next few hours in the run up to 10 o'clock tonight. I'll just pull those up in a moment for you just to see where we are in terms of the British pound and the election that's going on right now. And the polls close at 10 o'clock our time, which is 5 o'clock Eastern, I believe. Let's just go back on to the, let's have a quick look at commodities. See what's going on there. We've done some posts about oil, bullish on oil at the moment. And in terms of gold, gold's having a choppy time, but generally bearish. And the key for gold, this is on the daily chart, this is on the February contract. The key for gold is really this level here, which is starting to build this this quite strong platform. If that is breached, then we're going to see more downside momentum for gold. And of course, some of that is driven by the reaction in the US dollar to fundamentals and safe haven and everything else. Gold's tried to rally again up to here, 1490 plus, but it's fallen back. Decent volume building under that. Trend monitor still flashing, bearish sentiment. It hasn't rotated back to full-blown red yet, but it's certainly getting there. And the key for gold is if it breaks this technical level and moves below that, then there isn't a great deal of support likely. Certainly as the volume is falling away on the volume point of control, you can see here, then you would expect gold to move through there pretty quickly. That's not to say there aren't opportunities in intraday. This is oil, classic example of the volume, the volatility indicator here. Big spike, volatility. We know the big operators are in there. You can see it in terms of the volume. Now we're trading in the range of the candle, which is what you expect all the time. And now we're starting to see that reversal come into play. When you get the volatility trigger in real time, and if you've got a profitable position, then I always say take your profit off the table. Either close the entire position or at least take a chunk of it off. If you've got multiple contracts, then take however many off, leave maybe one or two, but don't leave the bulk of your position open. Just take your profit, bank it, and then wait for either for the trend to continue in the direction you were trading, or if it's going to reverse, then that's fine, all well and good. If it continues in the same direction, you can jump back in. It's no big deal. Cost of trading now is peanuts, particularly if you're trading with someone like Interactive Brokers or one of the big deep discount brokers. Then it really doesn't cost a great deal to jump in and out of the market all the time. Nice move developing on gold. And this is a 5-minute on gold, and these heavy lines here, this is on the accumulation distribution indicator, which presents these lines in accordance with how often they have been tested or retested. So the wider the line, the stronger that region, the greater that number of times that level has held, in other words, and therefore the stronger it is in terms of a support or resistance level. So once you've breached through a level like that, for example, it's a great signal that for the market to reverse against it, it's going to take a really big effort to breach that level once more, because there is so much resistance overhead now. That's how the accumulation distribution indicator works in real time. And you can see these thinner lines. These have only been tested once or twice maybe. These thicker lines down here have been tested multiple times. And when you get clusters of them like that, that is a huge, huge area, either of support or resistance to the market. Let's go back over onto the multiple time frames where we were. Okay. As I said, the selling volume, the selling pressure under these candles was not great, and I pointed out at this at the time. This doesn't look like a price waterfall. This should be rising. It's not particularly heavy. It's just signaling the fact that, okay, we've got a reversal in place, but look at the volume associated with it. It's not climbing astronomically. It's just not climbing at all. It's just very flat, not particularly high. And therefore, the expectation is that that move is really coming to an end, and therefore you like to see a reversal. The question now is where is this market going to reverse to? Just staying with that 3-minute chart for a moment. The first point it's going to go back to is the volume point of control here. At that point, the likelihood, the expectation, what do you expect it to do? You expect it at that point to congest for a period at the very least, purely because you've got an absolute ton of volume here. This is the fulcrum of the market right now, and therefore that's what you expect to see. It would be unusual for this to just shoot straight through. So if you're trading this long now as a scalping trader, your expectation is that the market is going to congest, and this will just be treated as you would normally with price-based resistance, except it's just volume-based resistance and confirmed with the fact that you've got the volume point of control there. This is a sort of classic what you would expect to see, and this is what I would have expected to see in this downtrend, but you've got it in the uptrend. So here we have rising volume and rising price. So that is in agreement. There is no anomaly there. For a market to rise, you need to see effort. You're seeing effort rising, and you're seeing price rising. So the two are in agreement. In this one, it was different. There was no rising volume. In the same way, when a market falls, if it's going to fall fast, then this should have been rising like this, and it wasn't. It was just flat, and therefore giving a signal, pretty strong signal, that this was really not a full-blown reversal in trend. In other words, from this primary down into a primary bearish trend, but really more of a secondary pullback in what you could consider the longer-term bearish trend intraday, which is bullish for the time being. So now what we're expecting is congestion at this region. We hop over onto the 15-second chart. Certainly what we're seeing now, we've got the volatility trigger came in again. So what we're expecting is congestion, which is what we're seeing. The market's trading in there. And the reason this is such a powerful indicator, and the reason it's such a powerful mechanism that is used all the time by the market makers and big operators, is simply this: that when the market jumps quickly, your natural instinct, your natural emotion is to jump in and join in the move, because you don't want to miss out. It's a fear of missing out, FOMO. It's a natural reaction. Everybody does it. We're hardwired that way. You can't avoid it. You just have to understand that the reason it works so well is that your natural reaction is to jump in, and then from a market maker's perspective or a big operator's perspective, it's very easy just to trap you into a weak position and then squeeze you emotionally. Because even if this market continues higher, you've now got the emotional pressure of being sat in this position as every candle comes and goes, and it's not going higher, but actually it looks, well, it may be going lower, and maybe you get stopped out anyway. Maybe you've got a stop loss in here somewhere down at this region. So, you're now stressing about the fact you're probably going to get stopped out. And you're now thinking, well, shall I close the position anyway? Because if I'm going to get stopped out, I may as well give up these. I might as well save myself a couple of points at any rate. That's the internal dialogue that will go on in your head once you're trapped in one of these positions. I can absolutely assure you, I'm sure you know what I'm talking about. It's just a fact of life, and we have to live with it. Speaking of facts, the fact now is that we've got the volume point of control pretty much in evidence on certainly down to the 10-minute. So we're here, so we're just expecting congestion for lots of different reasons. We've got volatility here, so we're expecting the market to trade inside that candle. We've got the volume point of control, lots of volume here. If this market is going to break higher and you want to get into the trade to the upside, then my suggestion would be to wait till it gets to 31.80, maybe a little bit beyond there, and then it's a question of jumping back in once the market picks up further momentum. But it's a question of now waiting and being patient. Let's just go back to the currency-specific indicators. Where are we? All right, there we go. Okay, let's see what's going on. This is on 15. Just drop down onto 10 there. So we've still got, the yen is still selling, but it's very, very heavily oversold. Let's see if it's starting to kick up there. Not yet. So the Aussie is very overbought. The yen is very oversold, and that pair is, as I'm sure you know, is a proxy for risk. And it's just a question of seeing whether this is going to continue higher. And obviously, if you went up to 30-minute and the 60-minute, on those time frames, they certainly wouldn't be overbought and oversold. They'd be maybe two-thirds down the chart. And it's all a question of perspective. What is it you're trying to do? Are you trading this on a 1 minute, 2 minute, 3 minute time frame, or are you trading this on a 15, 30, 60 minute time frame? Just have a look at the currency array, see where we are. Just isolate out the yen pairs. This is on 5 minute. So that just gives you a heads up. And what the array does, it gives you many different bits of information, not least the broad sentiment for the yen. And the yen is a very simple pair from this perspective, because the yen is always the counter currency. Therefore, you don't have any pairs at the bottom. So if the market is universally selling the yen, as indeed it is here, then you expect them all to be above the horizontal line or the midpoint here, which they are. Then what it's telling you is which pairs are stronger. The strongest at the moment is the Aussie yen, simply by the inclination of the line. So it tells you about market sentiment. It tells you about the strength of the pairs. Pound yen, you can see here at the moment, is not the strongest. It's pretty weak. That's partly due, obviously, to what's going on in the UK at the moment. That's tending to weigh that down. So you wouldn't expect that to be roaring up, purely because local politics is going to dominate that particular currency. And hence, in the currency matrix, you're not going to see such strength as you would do in the Aussie yen, which is not being weighed down by that particular aspect of market or politics or whatever it may be, or fundamentals. Then on the ranking ladder, it gives you a view of when a currency or currency pair rather is approaching an overbought state or an oversold state. When they get to potentially overbought, they will do this. They will go to a brighter color and the brackets will disappear, and the same at the bottom when they're oversold. Just head up onto 15. I'm sure it's the same picture there. Just isolate out the yen. There we go. We've got one or two coming up into oversold. We've got the cable there is potentially at an oversold state. These three here are potentially moving towards oversold, but haven't actually arrived there. And we've got a few climbing up, which are potentially arriving up into overbought, of which the Aussie yen is one. Finally, onto the currency heat map. Just isolate out the pound. There we are. In fact, let's isolate out the yen. There we go. So that has been, the pound yen has been pretty strong, but it's starting to see some bearish sentiment coming into the market now across the sells. And remember that these pairs here, this is not ranking these at the same speed as on the matrix or at the array, because these guys are weighted, and they're weighted according to these time frames across here. So the more bearish or bullish on a slower time frame, that will carry more weight than indeed one of these faster time frames over here, as you would expect. It's common sense. So if you've got bullish or bearish sentiment, as we've got bearish sentiment coming in on the pound yen here on the hourly, that is going to carry a lot more weight than what is going on the 5 minute right now. Just click those back on again. And you can use these in exactly the same way. When you're looking at the ranking ladder here, euro pound here right at the bottom, you might be looking at that as a potential reversal. Pound yen right at the top, you might be looking at these guys as potential reversals, exactly the same as you might do on the currency strength indicator. Just head on to the multiple times again, see what's going on, see where we are, see if we've actually moved away from the volume point of control right now. Still trading around that. When you get these big surges, then you're always going to get these phases of price action where the market pauses, congests, there's profit taking going on, there's all sorts of things going on. The market is not going to carry on rocketing higher forever. You just have to take advantage. This one was early doors. It came in very, very fast, jumping on board, taking some profit, closing out, now waiting for the next leg of that particular move to develop. But bear in mind always, when you're looking at it from the perspective of what is left in terms of the trading day, when you look at it, you've got to look at how many points. In fact, the easiest way to do this is go on to the indices themselves on the other one, this one. Okay, when you look at the daily charts here, you've got to keep this in perspective. When you look at the YM, for example, you're looking at it and thinking, okay, if I'm going to trade this long, is the market going to go that much higher? Well, we've had this amount of travel so far today. Okay, we had that the other day, so maybe there's some more opportunity to the upside, or maybe we've seen it. Maybe the market is just going to congest now and move sideways for the rest of the session. And it's just keeping it in context. How many candles have we got up here that are wider than that? So how much more opportunity is there? And that's, that applies to all three indices. This is the one we're on at the moment. This is the ES. We had that price action the other day, so we've got, you know, similar here. There's nothing really much wider. Maybe there, that was a little bit wider. That was a pretty dramatic day, but then the volume was pretty lightweight on. It wasn't too bad on that day, but it was certainly what you might not expect for such a big up move. And indeed, it ran out of puff the following day and reversed lower before picking up some further buying in here. So you have to keep that in mind all the time. And it's a fact that you've just got to accept the fact that these moves are rapid, take advantage of them when they're developing, confirm with volume price analysis, and then get out. This is just a classic move. The rally is rising. Yeah, we've still got some bullish momentum here, but look at the volume falling away. It's just a classic signal that, yeah, there is a bit more to come, but it's not going to go very much further, because the buying momentum behind that move is drying up, and you can see it visually as the volume falls away. Let's go on to the tick charts. Let's see what's going on there. And what you'll see in terms of exactly that momentum, that will be revealed on the tick charts, because tick charts are independent of time. They have no relationship with time. Their only relationship is to the number here. In other words, how many ticks are going through the market on that particular chart, and therefore what you see with a tick chart is raw momentum, which you don't see with a time-based chart. When the market's fast moving, these charts will be fast moving. When it's slow, exactly the same principle. And what we're seeing over here, these numbers here, I can assure you, are pretty slow. This is 377 or 384 on the actual, but that's pretty lightweight for an ES on 1 minute. Just update that there and talking. And it's a lot of traders, a lot of index traders will guess what the tick chart setting should be, which is fine if you want to guess, or talk to a neighbor or talk to a fellow trader, and they'll say, well, I trade at this speed, etc. And it's probably 1.5 miles away from what it should be. These are changing intraday, as you can see. We'll just change this one up. This is 1597. But all of these numbers are pretty low for the ES contract, which is the most heavily traded in the market, bar none. These numbers should be an awful lot higher. Don't know why that one's not loading. We've got a few problems with our broadband right now. We're on a Wi-Fi mobile system, but when the weather's really, really bad, like it is here, it does tend to cause us issues. Not loading right now.
Sorry, one thing, that market shoot up was also on a Donald doing his best to push it up, and VPA
yeah.
tells you the truth behind it.
The spike up there was on, there we are, they've loaded now. Sorry about that, it's just very sluggish at the moment, apologies. The spike was really on Donald, and as I mentioned much earlier, it really is about the souffle effect. He's a blessing. I have to say, we love him to bits, because from a market perspective, what he does is he drives volatility into the market, which is fantastic. It means there's always something going on when he's around, which we love. And what it also means is it's an opportunity to make money both ways. You make money on the reaction, the immediate reaction, and then there's the opportunity to make money on the reversal reaction, the souffle effect. And that's what we're trading all the time. So, not from a political perspective, I'm politically neutral as far as this conversation is concerned, but from his effect on the market, he is just worth his weight in gold. Excuse the pun, but he really is. It's just joyous for trading perspectives, because the number of days where he steps in, the Twitter line goes, and we're off, and that's it. You just got to be ready, waiting, have a good feed, have a good news feed. We have Talking Forex, which pushes through all the latest stuff, but you can pick up free stuff. You can go to forexlive.com, for example, or any of the news sites. They will get it pretty quick. But Talking Forex is pretty good. They'll squawk it out almost immediately. So you're on the ball, you know what's going on, and you're waiting for that reaction to occur and the follow-up to it. You can see how we're running. It's pretty slow here. The reason we developed this as two numbers was just to give, it avoids changing the charts quite so frequently. This is nothing to do with Fibonacci. There was a mathematical method to arrive at a number that was close to the actual. So it didn't mean you had to change your charts quite so frequently. So this is now slowing down. This is now 233 tick. This is on a 1 minute time horizon. So the equivalent to that, there we go. So we're now running at 233 tick on the 1 minute time frame from up here. And what it also does, it gives you a visual on whether the market is sluggish or whether it's really moving along nicely or rampaging. And at the moment, it's very sluggish, a lot of red around. You can see it here as well. This is the 3 minute time frame, an awful lot of red, spots of orange, but not a lot. And it's starting to migrate down onto the 5 minutes. And what that's telling you loud and clear, it's just saying, look, this market is slow, slow, slow. That's it. It's just very sluggish. And if a market is going to move quickly, then you want these numbers to be much, much higher. And in addition to that, you want to see these bars running in orange or preferably in green. You can see the green efforts here where we've got an increase in activity. You can see the tick activity picks up dramatically. We get a nice move in the price action, changes to green. So we come out of orange into green. This is what we want to see all the time. And it gives you the opportunity, if you're a volume trader, to blend volume price analysis from here, but actually trade on a tick chart which has momentum and has no relationship to time. The only relationship this has to time is how long does it take for 233 ticks to go through the market. That could take a nanosecond, could take a millisecond, a microsecond, a full second, handful of seconds, whatever. But that's what dictates how quickly these candles form. So if the market is fast moving, then these candles are going to be fast moving. It's as simple as that. And that's the power of trading using tick charts, using something like the tick speedometer indicator, which delivers the optimal tick settings for you. It's like the Renko does on MT4 and MT5. It's a nice move developing. You could jump on that. The trend monitor here is transitioning through to red, coming up nicely. What we want to see, though, is we really want to see these ticks picking up because this is pretty sluggish. So this is not a fast moving, this is not a price cascade, this is not a price waterfall because the tick activity here is pretty low. This has dropped away again. This is now 144. Just step that down. There we go. I'm still running at 1597, but this is on a 5 minute time frame. That is desperately sluggish for the ES to be running at 987. This should be running at several thousand ticks up here in a fast market, and it's not. So it's pretty damn sluggish. Let's go back onto the time charts. You'll see how that's panning out there. There we go. I'll just pull that one up. There we are. But it's not a market that is collapsing out of sight, either from a very fast scalping perspective, as here, or indeed on a slightly slower time frame. Trend monitor is bright red. You can see we transitioned through again, which is nice. But it is very, very sluggish. We've got you get a little move and then you've got congestion. What you want to see in a price waterfall is the market really roll over strongly, supported by good volume, which this one isn't for the time being. Above, we've got some very strong resistance now overhead. We've got through this level here. So from a reversal perspective, if this is going to come up and test it, and if it was to reverse back right the way back up to the VPOC, it's got to get through this level here, which is pretty strong. We've got a cluster of two lesser strong levels here, but a cluster of two together. So they are going to act in concert together and be strong. So you've got some pretty decent price-based resistance overhead here. Should you see a reversal in due course. You can see here the trend monitor on 3 is now rotating through into the bearish phase of price action. We had a little bit of a transition here, but it's gone back into darker red again. So the bearish sentiment from here, the red bearish sentiment, is now starting to transition through into here. And ultimately, if this does break further, then this is going to go bright red. You're seeing a transition out of the bullish sentiment into a darker blue. So again, here we're seeing this slowing of bullish sentiment, this rotation in the time frame through into a bearish phase potentially. And of course, this will be of the 3 will be the last to change. We've got no flicker down here in terms of 10 and certainly nothing in terms of 15 at the moment. You wouldn't expect it. But that's what happens. It cascades through the time horizons. the changes in sentiment. The stronger those changes, the quicker that cascade will happen, the quicker those changes will be in terms of the trend monitor indicator. The trend line will dive below the midpoint. I haven't got the trend dots on here, but in terms of trend dots, you would see exactly the same principle, and you'd certainly see it reflected in terms of the tick charts. I think I've got trend dots over on one of the tick charts from memory. Yes, got them over here. Let's get that out of the way. There we go. And it's using the two indicators in conjunction. The trend dots work very close to the price action, and they will transition first, whereas the trend monitor takes a more considered view of what is going on in terms of the price action. So in terms of this little piece of price action, we had a few blue dots come in. Now we transition back into grey, which is the congestion phase of price action, and now we're coming out into red. And that is all reflected there as well, but it's more compressed. We're now starting to come out the other side. In addition, the trend dots, what you're looking for is where they are positioned in terms of the price candle itself. Are they above, are they below, or in the middle? If they're below, then obviously they're supportive, and as that changes, they move to the top, and then they sit, then they sit on the top and they start to press down on the price action as it moves lower. And you can see that effect here. So they're above, 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 they're starting to press down, and then as that mini reversal comes in, they move to the underside of the candle and start to support, if you will, and act in the opposite way. Let's get rid of that. There we go. Go back to our time-based charts again. There we are. Very weak reaction to the upside, a bit more volume coming in on that one, but certainly in these guys, pretty weak and weedy. Hardly strong buying at the moment. So, are there any questions? Nope, I think we're okay. Let's move that out of the way. Move that down. And one of the reasons I like to have all three indices up at the same time is because it just gives me a different perspective on price, on volume relationships, and so on and so forth.
Right, Dominic, you've been going for an hour. So
okay.
Do you want to
where are we? Gosh.
They've got to come and let us know when they want to come to the new system.
Yes, indeed. Okay. Anna's just reminded me that as of this is actually going to be our last webinar for this year. Because we're getting a little bit close to Christmas, and so we've just decided to make this the last one for this financial year. We will be back again next year. Now, what we're doing next year is several things, but most importantly, we are changing our webinar provider purely because it doesn't offer us a lot of functionality of things that we actually need for running these sessions, which will make them much easier for us. So we're with GoToWebinar at the moment. We are changing that. So in terms of webinars for next year, live sessions, we're doing other things as well. You will need to re-register again because these sessions will come to an end. If you're on one of the repeating ones where you get the sign up, you've been signed up for a while and you get the weekly reminders and so on and so forth, they will stop because we are moving, as I say, to a different provider. We will make you all aware of that lots of different ways. You're more than welcome to drop either of us an email, personal email, so we'll make sure you're on the list to be reminded, either anna@annacooling.com, or you can get hold of me at david@quantumtrading.com. Either of those will find us. But rest assured, we will make it very clear on Anna's site, so do check in there over the next sort of couple of weeks. Certainly on Anna's Forex page as well, on her Facebook pages, and it'll also be out on Twitter and all sorts of different places. So it just means that you will need to re-register if you're a regular attendee, and that's just to make you aware of that. And obviously we appreciate you coming along to these, and it will be a very simple sign-up process and exactly the same as before, so don't worry about that at all. As I say, so we will be back in the new year, slightly different formats, doing different things, but we will be back, so don't worry. Let's see where we're going. It's you know, it's falling away. Of the three, the one that is perhaps moving quite strongly, and this is why I like to see all three, because it gives you. This is not a case of whether they all move together. Generally speaking, they do, but they'll often move at different speeds. And you can see on the NQ that is moving at quite a nice speed, and certainly picking up on. Sorry, just picking up. Oh, right. Sorry, there's some questions. Apologies. I also have my chat box closed. I know many of you know I do. Apologies. I'm not being rude or anything or ignoring you. It's just that it's easier for me when I'm in full flow. Just want to move that out of the way because there is a nice move developing on the NQ. This is on 5 minute, just hopping onto another index, but it just gives you a perspective that if you're trading index futures as one of your markets, do look at the other two, because you may often find that the one you're trading is a little bit sluggish. The one you should be trading is perhaps moving a little bit more rapidly. But in addition to that, this is also moving down to volume point of control. So it's giving you another heads up, another bit of the jigsaw puzzle that maybe this market is moving into a congestion phase at this point. Sorry, let me go back to the questions. Apologies, I got diverted again. Oh gosh, stay open. Go there. All right, sorry, just opening up. It keeps closing on me. Sergio, could the price move up or down without clear visual volume? Yes, purely because the market makers and the big operators will move price around without participating. That's how they trap. And what volume does, it reveals the truth behind the price action. Now, many times price alone will give you a heads up. If you see, well, for example, candles like this, you know, these three candles here are a clear signal that there is some weakness coming in the market, because the wick is the most important part, certainly one of the key parts of any price candle. And when you see this sort of appearing, it's just a signal that certainly from a price perspective, that there is weakness. There has to be, because if there was strength, those candles would have closed pretty much on the highs. There wouldn't be any wicks, and you know, that's the long and short of it. You then look at the associated volume to give you perspective on that from a volume perspective. In other words, is this a genuine move? Is the volume in line? Is it light? Is it a trap move? What is it? Is it buying? Is it selling? And again, when you see these sorts of candles, then you infer automatically that there's heavy selling in here, because otherwise, if it was buying, this candle would have closed up here. It hasn't closed down here. So that's price alone will give you some of the information, but it's volume which really paints the whole picture, and that's what it's about. So the short answer is yes, you will see this all the time. You will see rapid moves on low volume, which is clearly a trap move by the market makers. And before everyone shouts foul, this is not fair, that's what you would do if you were an insider. Let's be honest, it's so simple. You rack the market up, you don't participate yourself, everyone jumps in, thinks it's a genuine move, and because they're not using volume, they haven't got a clue, and they get trapped in a position. I hope that makes sense. Ramon, thank you so much. Thank you for coming. We do appreciate, obviously, you coming along, spending time with us, and we hope you find it useful. I'm reading the VPO, and it really makes a lot of things fantastic. Just delighted. Anna is always delighted to hear from traders who've read the book, who you just keep in touch. You can keep in touch with the blog or Facebook pages or whatever. It's very humbling, I have to say. It is a humbling experience for us both. The number of kind comments we receive and wonderful emails from people, from new traders, from traders who've maybe struggling, from traders who've been trading literally 10, 15, 20 years, have come across this methodology. And the beauty of it is you don't have to change what you're doing. If you're an Elliott wave trader, or you're a Fibonacci aficionado, whatever it is, you can bolt this underneath. You don't have to throw the baby out with the bathwater. You can just apply the methodology, because all you need is a chart with price and volume on it. It's as simple as that. And if you have that, you can trade any instrument, any time frame, anywhere in the world. You almost don't need to know what's at the top of the chart, other than obviously you need to know the contract size you're trading and all the rest of it. But from an analysis perspective, it makes no difference. And it's funny, we get a lot of emails from people who say, well, can I use your indicators for trading binary options? And we always say, well, yeah, I mean, if you've got if a binary option has a chart, why not? It's exactly the same thing. It's just a chart with price and volume on it. It's as simple as that. So thank you for that, Sergio. Sometimes I've seen price go up without too much. Yeah, absolutely. And that's the reason why, because it's a trap move by the big operators or the market operators, depending on which market you're trading. It's as simple as that. Some people buy into that, some people don't. Some people think technical analysis is a load of hooey. You know, there's no right or wrong way. There's no rule book that says you have to trade this way, and there's nothing that says this is the right way to trade or that's the wrong way to trade. You know, if that were the case, there wouldn't be millions of traders out there all doing different things, finding something that suits them, their personality and the psychology of their personality, and applying that accordingly. So there we go. I'm going to call it a day there. Looks as though it's going to pause there, the NQ at that volume point of control, which is, as I say, what we expect. But you can see the trend monitor here is transitioning through into a bearish phase, and we've got the trend line here. So we've got the classical souffle effect of a Donald Trump, bless him, up we go, and down we come the other side. It's a bit like Snakes and Ladders if you've ever played that game in probably a UK game, but I'm sure you know what I mean. Have a super holiday, everyone. Anna's waving goodbye. As I say, if you have any questions, then please drop us an email. I'm happy to answer them. Just move that out of the way. You can find all the indicators here. This is just, I've got these are the odds, by the way, just to wrap up very quickly. This is what's going on literally at the moment. We've got another 5 or 6 hours to go before the polls close. This is on Betfair, which is a peer-to-peer betting site or betting company. May not be available where you are, but it certainly gives you an indication of what the odds are. So here, you're betting 100 quid to make 48 on 148. This is decimal odds. In terms of spreads, this is what's being forecast. This is on Sporting Index, but there are several others out there. 337, 343. So this would give the Conservative Party a reasonable majority in the UK election tonight and tomorrow.
If they're trading at the most volatility, will be the exit poll.
And just to give you a heads up and a warning that if you are going to be trading the pound overnight, as we will be up all night. The key time that you have to be aware for major volatility is 10 p.m. UK time, which is 5 p.m. Eastern Standard Time, because the instant the markets close, the instant the polls close at 10 o'clock, there will be an exit poll, which is released almost instantaneously. That exit poll is based on voters leaving polling stations and saying one way or the other how they voted. Now, whether you believe that or not, the fact is it's pretty accurate, generally pretty accurate. It will have a massive impact on the market. The pound will spike. And then thereafter, it's a question of trading through the night in terms of looking at, as seat-by-seat result comes in, the ones to look for, I think, is Sunderland East or Sunderland West. Generally comes out first. They're very, very fast. They literally run it as a military operation. I can never remember which one it is, but it's certainly one of those. That is, generally speaking, a pretty strong Labour seat. And any clues as to how how this is going to pan out will certainly come early doors. So please be aware of those if you're trading through the night, as we will be, because it's just a great time to trade and lots of volatility and lots of opportunity. Sorry, I got diverted there. Apologies. You can keep up with us here on Anna's site. I'm sure you know where that is, annacooling.com. You can see all the books there. We've got all the indicators there. We've got TradeStation coming soon. This is the Forex education program over at Quantum Trading Education. I know we've got some of our users in the room here. I know we've got customers as well. If you've only bought 1 or 2 indicators, you're more than welcome to buy some more, obviously. But if you want to use that credit to step up to the education program, we are always happy to credit you for whatever you've spent with us. And you can join the program there. And this is the module we always focus on, the psychology of trading, because it's so important. This is the trading floor. And then over here, you can find all the indicators, MT4, MT5, NinjaTrader 7 or 8. This is a single license, so you don't have to buy a second license. It's the same one. You just run them, whether you want MT4 or MT5, whether you want NT7 or NT8. It's entirely up to you. You've got TradingView. And coming soon is TradeStation. This is both for TradeStation Securities in the US, which is running on TradeStation 10, and also on TradeStation Global, which is on TradeStation 9.5. Now, the TradeStation Global is driven by the relationship with Interactive Brokers. It's a fantastic relationship. It gives you the opportunity to trade on the TradeStation charting platform, which is magnificent and driven by the interactive brokers data feed. So you have the advantages of running on a fantastic charting platform, but you've also got the opportunity to trade through that platform through a deep discount broker like Interactive Brokers, which is massive. You can trade all the markets, you can trade spot Forex there. It just opens up that opportunity for you. We have it running, works great. As you know, some of you know, we have a pretty chunky Interactive Brokers account, and we use that through there as well. So all of that will be coming. That'll be coming in Q1 next year. As I say, you know, we are changing the sort of formats and certainly the provider for the webinars. So do keep in touch. And if you have any questions, just drop us a line. I'd be happy to answer them on air for you. So thanks very much indeed. Have a great rest of trading day. Enjoy the rest of the trading week and the trading month. And we will see you back here next year. So happy holidays to everyone. Thank you so much for coming on. Appreciate all your kind comments and your support. I hope you've enjoyed today. We will see you soon, and bye for now.